Good morning, active traders, and welcome to our Trading Week Ahead live broadcast coming at you live here on Saturday, June the 5th, 2021. I hope that all of you are doing well in your trades. When you go from before to after becoming a better trader, one of the main features or one of the main goals that you should have is to have as small stop loss cost as possible and combine that with the very strongest consistent breakout patterns. And one of the things that I like to teach traders in my live room is opening range gaps, breakouts, swing and day trades. And just a reminder, we do have the success sale in play for the next week or so. And one thing that I added just yesterday was a bonus. I'm stacking the bonuses to make this an irresistible offer because it's a great deal. You get a whole year, over 300 hours of training with me for just the $9.97, plus a downloadable 15-hour trade mastery coaching course, plus a half an hour. I don't have my cell phone with me here, but you get a half an hour with me one-on-one. And we'll schedule, it may take a month or two to get the call scheduled, but we will get to them and you can work with me as well as join in the live room for our Monday through Friday sessions that start. Usually I'm there at 8:30, but 9 o'clock is our official start time. So anyway, back to our regularly scheduled program. Let's get underway. So do give that some thought. You have my word, it's a great deal. It's only $9.97. That's what I used to charge for a 2-day seminar. And here you get the whole year of Monday through Friday live training during live markets with the screen share. You can see my live charts with specific alerts and all the rest of it. Anyway, our S&P is obviously right, hugging resistance at the 4250. I have a bearish upper shadow here and a bearish engulfing here. So we got a couple of overhead resistance points hammering out a top near the 4250. Would not be surprising to see a false breakout and then a moderate correction or pullback next week. So whenever you're at or near an all-time high, always expect a fake out. Don't expect the market will just hit and run and keep on rallying, because often you'll see a breakout and then a pullback for a week, a breakout, a pullback for a week or two, a breakout, a pullback for a week or two, a breakout, sideways chop, and then a pullback for a week. So we're in a relatively quiet range here since the old tax time around the April 15th. The market's been largely flat in the last couple of weeks, so we really want to focus on charts that have best directional volatility, like our Ford Motor Company that I used to work for back in the decades ago time, back in the early 90s. Anyway, Ford looks good. I'm long Ford myself. Anyone else trading Ford or considering it? It looks good. I like this a whole lot better than Tesla. Tesla, I called as a mother of all shorts when it was back in the 900 region, and I was right, as often is the case. But anyway, Ford is just now starting to break out to new highs, and it's gone up quite a few points here this last couple of weeks. So Ford's a top pick. You may want to keep an eye on that one as well. Hand in hand, before we look at other charts, I'd be remiss not to mention a little bit on the VIX. The VIX is down right over 16. Where did we close? 1642. So the VIX is still down. The major decision point is still 20. So as long as the VIX stays under 20, they'll keep buying stocks, or you'll see a correlation with increased buy. Now, I think that right now is a smart time to consider looking for inverses or shorting the market or buying puts. And whenever you're at a all-time high, you often get a reversal as well as a continuation. So often you'll get the breakout, like I said, and then it's a fake out and you drop for a week. So the play would be, I think the smart money play would be looking for potential, either buying puts if you're an options trader in the major market indices, or looking for volatility patterns in the VIX to confirm. So my point is that the VIX gets back over 20, look out below, the market will drop like it does every time the VIX pops over 20. I think buying volatility right now is a smart idea. So that's why I trade UVXY. I've got a love-hate relationship with UVXY. When I make money with it, I do extremely well. When I lose a little bit. Anyway, let's take a look at some rockstar charts. And I'm going to blaze through these relatively quickly with some notes. Steel Dynamics, a reopening, well, infrastructure play at STLD continues to look really nice up at new highs. We'll see if he breaks over that 66. Nucor and UE also really strong up here at the 110. Little pricey for my personal taste. I don't like trading things over $100 a share, but it finally broke over that 100, and now it's in the new boxed range, right? The range between 90 and 100 you see it chopped around near the 100 for quite a few weeks. Now it's broken to a new kind of a Darvas box or new breakout to the upside. At least it poked its head over that 110 back on Tuesday. So we want to see if NUE breaks over 110 for continuation. I'd be looking for long over 112. One of you good folks had mentioned ALLY, another spectacular swing trading chart. It's gone from 30 to 56. We've been calling it long for weeks. Tilray is good for potential bounce. I've been mentioning it for you starting back here. And I told you 20 would be the initial exit target, and that was achieved on Thursday. We had a gap up and then a fade on Thursday in Tilray. The next long would be over 22. And personally, I'll wait for maybe 22.5 or so. The Tilray, one of the cannabis stocks, makes sense as well. Hey, folks, too, let me know if you have any good tickers. If you have any tickers you'd like me to pull up, I will try and squeeze in as many as I can in today's session. This is a random cheapie, TELL. Ran all the way up to 6 before a pullback. One of my smart traders, many smart traders, but one of my many smart traders, Mick, had mentioned this one, EYES. It's on the move, and he had mentioned it yesterday, and it ran all up to just under 7. So EYES, we'll look at day trading charts momentarily. Hecla Mining, also a good infrastructure or whatever type play. HL, a nice recent breakout. Now we got meme stocks galore like Bed Bath & Beyond, AMC. What a run. The thing about trading AMC is when it runs hot, but when it runs cold, it chops around. And you want to be on, say, as an active trader, one thing that I think can really help your trades is to be very binary and think about the difference between high volatility, risk on, versus low volatility, risk off charts, and which charts are most likely to make you money with minimal risk involved. And so one of the things you want to look for is consistent breakout patterns that have sustainable buying day after day for swing trades. Now, AMC would not be a suitable candidate for swing trading because the range is too big. You could buy at 45, 50, or like if somebody had bought it at 70, and the next thing you know, it's back down in the 40s, right? So you don't want to swing trade a chart like this, but it's very good for intraday trade. So that's our AMC meme stock. A couple of you had asked about charts. Here's one, SGRY. This one's a splendid example of a consistent breakout for a swing trade. These are the kind of charts to swing trade. Does everyone see why if you compare that one with this one? This one, I mean, yeah, you could be instantly rich, but if you'd bought near a high, you'd be instantly down a lot too. So you don't want charts that have big swoops up and swoops down for swing trades. What you want is more consistency like this chart. Or Ford Motor Company, good consistent breakout. One of you had asked about CONN. This one also a nice base going from, it over doubled going from 12 up to just over 30. So that's a good chart, and thanks to whoever had asked about that one. And yeah, Hecla's good. Let's see, hey Gary, hey Polly, let's see. Hey Margaret. Hey, good morning, Tom. Ohio. Let's see, traders asking about OGI and someone else about Express. And for cheapie, it's on the run, maybe we're over 3.5 or so. Doesn't have quite the range or the consistency I like because it's up and down and haphazard. I like charts like that, but maybe worth a shot. I want to pull up some day trading charts here next. Yeah, another cheapie, EXPR. But again, those, they're kind of hit or miss. It's better, how to say, a quick coaching tip. Your goal as a swing trader is to start small and then snowball, or maybe summertime's not the right time to use snowball analogy, but start small and scale up. So you put on a lot of small trades, The ones that go against you take small stops, and the ones that go for you, you double down, or at least you add to the winning trade. And the way to do that is trade charts that have consistent uptrends. If you don't have a consistently uptrending chart, you really shouldn't be swing trading. That's more gambling. The cheap stocks that pop up and back down again, it's very risky. I would, at least if your experience is anything like mine, I find I get stopped out if I trade less volatile, less consistent charts. See, charts that scoop up and back down like this, kind of difficult to trade. This one was good though, QFIN, this good day trading chart from yesterday going from 32 to 36. That's a really good example of a classic breakout pattern, or what's called an open range breakout, an ORB, a term popularized by Tony Crable in commodities trading back in the day. Anyway, that's an open range breakout. It ran up during the open, then just kind of chopped around the rest of the day. And so frequently, like trader Steve had mentioned, this is a pattern you often get. You'll see a run up in the morning and then a run back down in the afternoon, kind of the opposite of a V-shaped recovery. It's an A-shaped parabolic drop back down. So what that means to you as a trader is, at least whenever I'm day trading, which is most days, I will tighten up a trailing stop around 11 o'clock for a new trade. I usually don't trade though Mondays and Fridays, and very seldom do I trade. I almost never trade Mondays. I focus most of my energy on Tuesday, Wednesday, Thursdays, just so you know, because that's where volatility tends to be higher on balance as the midweek opens. Anyway, the point is, what it means to you as a trader is if you're looking to day trade something, you know, there's a couple of different ways to day trade. You can just try and scalp the open, which is challenging, but perfectly fine. That's one way. Another way is to try and trade such that you put on the trade early in the day and you do an all day long, what I call an intraday swing, or an all session long trade, where you put on the trade early in the day, like 9:30, 10, put the stop under the low, and then come back at lunchtime and tighten up a trailing stop. If it still goes up, great, but if it goes back down, at least you got paid and locked in a nice profit on the way up. And then if you don't get trail stopped out on the way up because it runs up all day, then you close out the trade right before the closing bell, like around 3:45 or so. So basically two different main ways to trade. You can either scalp the open, or you can try and hold it all day, or at least up until the middle of the day, and then tighten up a trailing stop. And frequently they will come back down again. So it makes sense to try and develop a trading approach like that. Wow, a lot of folks are posting tickers. Let's see what else we got going on here. Gold had been down on Thursday, so dust, the inverse ETF, had been up, but it gave it back yesterday. So metals I'm not too keen on right now. We're kind of at an inflection point in the market. Let me see, DXLG, SM. Good folks are posting tickers for me, so let me pull up the swing trading charts and see what we've got. Yeah, that's a wonderful chart. SM looks great, nothing wrong with that. In fact, I'm going to trade that myself. That one's good. See, if you look at something like Kohl's or BlackBerry, they kind of pop and drop, and that's not nearly as good as charts like this one that are relatively consistent, and they've got a really big range, right, from 4 to 24. So yeah, that's a great chart. Another one he'd asked about was DXLG. Let's take a look at that. Delta X-ray, Lima, Gulf. Yeah, that's a great chart. Good job, Bill. Those are 3 great charts you asked about today. It's they're all tradable. They're very good. I'd be looking for long in this one. Again, not a trade recommendation. Anywhere over the 410, like the shotgun shell. Anywhere over 410 long in DXLG, whatever that is. But that's a good chart. I like that chart. Let me see, question about where would I buy gold? Well, like I said, anywhere over the 40.5. It's making a bullish cup, so we'd want it to clear somewhere above the previous high, which looks to be around 40.2. So GDX gold north of 40.5. 40. So if it gets over 40.5 with the protective stop at say 39, that would be the swing trade for this. But yeah, it's an uptrend. Good pick. Hey, Serena, how you doing, man? Let's see. Question about Microsoft. A little too expensive for my taste, but that's a terrible chart that nobody in the world should trade. I mean, own it if you want to invest in it, kind of thing. But the range is horrible. If you want to make money as a trader, listen up, this is important. You've got to trade charts with a big percentage consistent. The two variables are range and consistency. Now with the cheap charts, under $10 junky charts, they have the range, they have the percentage delta, they've got the volatility, but they don't have the consistency. So you end up video game type hocking in and out of those, and that's not good. So that's not good. The flip side of that is expensive charts that don't have enough range to trade, and that would be this one. So there's not enough range to make money with Microsoft for any kind of a short, from a percentage standpoint, on any, because again, for my $200 a share, I'd much rather trade this at 20 bucks a share. This has a huge strategic advantage over something like Microsoft. So remember, you want consistent charts that are in a trend. The Microsoft chart also is sideways, choppy, and expensive. So it's a doubly horrible thing to trade. Microsoft, nope. I mean, fine if you're a portfolio manager and you want a long-term investment, Microsoft is great. And just like one talking head says, you know, with Apple, maybe you own it, don't trade it, and that's fine. So for a core holding, things like Microsoft and Amazon and Apple all make perfect sense, but not for short-term 2 or 3 week swing trading, because the risk reward isn't there. This is a wonderful chart though. This is a baller chart. It's what I call a baller chart. That's good. That one's good. That one's perfect. That one's perfect. That one's perfect. So do you notice the range? It's got almost a 2-to-1 ratio, right? From the low 30s to the mid 50s, so maybe 70% range. But anyway, a good consistent, like a piece of string that's been tied tight in a 45-degree angle breakout without the loops up and down like the Microsoft chart. So that's a good example of a strong chart. Hey, Joe, sure thing, Riot. I've got that in my core list somewhere in here. It's up in the top area. It's forced from the top. I got MVIS, CAN, Mara, and Riot, and then Tesla. Now, Riot and Mara had pulled back sharply off their earlier February gains, and so they're starting to bounce. And I like both of them, actually. I like both for Bitcoin plays. My two favorites that I trade are right now. I think I'm in Riot. I haven't pulled up my account for quite a few hours, but Riot looks good for a bounce somewhere, say over the 31. Again, not a trade recommendation, but I'm trading Riot, and I'll look for a breakout over the 31, 32. The other Bitcoin play is Marathon, MARA. And it's got a similar kind of a pattern, a previous gain to the upside and then a drop and then a consolidation and a start to lift. So they're both good charts. See, someone's asking, is Oracle too expensive? See, someone's asking about MOSY and CLOV. Let's take a look. Thanks for sharing your tickers. Hit me with your best shots. Again, 1 or 2 per person. Don't be that person that asks about 10 different things. That's irritating and monopolizing time. That's a perfectly terrible, horrible chart. No to CLOV. Just say no. Stop the madness. Like Mr. Wonderful, when I trade, I send, or he invests in things. His analogy is valid. Your dollars are like soldiers, and you send them out to capture enemy territory or to make more. You don't want to send your soldiers off to die a gruesome death. And that kind of chart looks like one would end up losing money with. So just say no. Hey, Stephen, PHR. Let's take a peek at that. PHR. You know, the neat thing about this kind of approach is my live room members ask about charts. That's okay for a recovery play because the range is good. Again, the first thing you look at when you look at a chart is not the chart. It's the right side, the scale of measurement. What's the range? Is the range tradable? That's the first and most important thing you look at as an active trader. So for example, if the range on this would say 44 to 54 total on the 6-month chart would not be of interest, but because the range was a previous high right near that, again, decade value 80, that also illustrates proof of validity of my concept of thou shalt not buy nines, right? You trade within the decade values. So you can see it peaked at the 80. You see that? That's a good example of why one should never buy a 9, like 79 would have been the worst place to trade this, would have been about a 9 at 79. Now, if you listen to what I say about don't buy 9s, you would have stayed clear of that. This looks good though, I like this one. It had a big move yesterday, right? Yeah, it's starting to run. But yeah, it's an interesting chart. What I like is the high volume candle. So that's good. Some buyers firmly in charge. I'd use personally over say 54.5 with a hard stop at 52. Hey, Goran, what do you think about LSPD? Let's take a look. And thanks for all the tickers. Now, the neat thing about the live room is I give you guys, you guys are asking about swing trades, but for, now that's the most terrible chart I've seen all day. This is a really good example of a horrible chart that I would never trade in a million years. It flies in the face of everything I say that's a good stock to trade. Light it up, guys. Tell me, why would this chart totally suck? Why would this chart be an epic fail? Why is this a terrible chart that no active trader in their right mind should consider trading? I can't begin to, I mean, I can begin, of course, but there's many reasons why one would not trade this. Yeah, Wendy's right. It's in a range. Tom's right, in consolidation. Jerry's right, range. Bill's right, it's all chop, not much trend. Andy's right, choppy. Do not buy at a 9 grade advisor. Sure thing, Smith. Yeah, sure thing, man. And it's at the top of a range, so. Yeah, this is an example of an absolutely horrible chart to trade. Now I say that and watch we come back next week and it's like 300 a share. We're like, dope, that could happen. But it's likely not gonna happen. Now compare that chart, like an eye test, with this chart. Which chart could you have made money with most likely easier? And again, one of the goals that I have for my live room members is to always try and make our trade setups. Now again, this morning we're kind of heavy on the swing trades. In the live room, we're heavier on the day trades than the swing trades. But one thing that I always like to give traders is an answer key of not only the gaps and breakouts, but exactly how and where to trade them. So for example, AMC, I called along yesterday at 50.7. I said, we sell it all now here at 53.7 for a live, real money, step-by-step walkthrough. There was a $3 paper trading winner on AMC, right? Before it got there, I said, we go long if it breaks over 50.7. And after it ran up, I said, we sell if it pulls back to the 53.7. And we did. So that's a $3 runner and so forth. So anyway, that's one thing that's a big feature in my live room that no one else offers, is a step-by-step specific walkthrough of exactly where to get in, exactly where to get out, exactly what your target should be, exactly where your stop should be. And I update them too with second chance entries, because frequently, as you know, a lot of the high volatility charts are good for multiple trades in a single day. So frequently I will say re-entry here up above a new high at this price point. So once you join my live room at Trading the Open, you'll be able to get updates daily not only for day trades, but as well for swing trades too. So, and also charts of your choice. You know, if you have any charts that generally fit our criteria, the main thing with enough range and enough volume and volatility, and within our price region, I do, as you can see, I do cover occasional cheap ones. You can see a few there from yesterday. But the ones that ran best were the ones that are priced best, like LEDS was a $2 winner for us. Tiger was over a $1 win. AMC, $3 win. SOXL was good for a pop. So anyway, I like to cover step-by-step what to trade, where to trade it. Again, for paper trading, educational use only. It's not to make live trades. You should be using, like, I recommend the Interactive Brokers demo account is the best way to paper trade. Unfortunately, Fidelity doesn't have a paper trading facility, but a feature. But anyway, very specific entries and exits. Now, what I wanted to bring to your attention before we get back to our charts is that I do have the room. It's not going to be $9.97 a year anymore for the annual. It's going up to $19.97, and when I put it on sale, it'll be like $14.97 or something. But if you want to get the best price ever, plus a half hour on the phone call with me, I got a brilliant daughter, and she made the recommendation to me, and I agree with her, as I usually do. She said I should add a coaching phone call as a bonus, and so for the next 10 days, I'm not going to offer this again this year. This is it. I have not offered a coaching call with me as a bonus in over 4 years. For any of you long timers, you know that's the truth. So anyway, this is a very, again, the only thing I want to ask you is I got so many traders, you saw my numbers, how many people register for these things. It may take us a couple, 3 months to get your call scheduled, so don't be in a big rush. Anyway, it's probably better for you to take some time and learn in the room anyway before you use your half-hour call. And that's something you can use anytime within the next year or even 2. So, but you probably want to use that toward fall or something. Anyway, as a bonus, I'm giving you 30 minutes, either on the phone or we can do a GoToWebinar together and go through charts and whatever you want. So, and that's a personal bonus. That's for personal use only. You can't record it and then resell it. I know some people try to do that. They said, get a copy of my coaching call recording. You can't do that. But for private use only, it's a really good bonus. So if you want to talk with me, and actually, I don't lecture, I ask questions, and you can go through, say, your recent stop losses, and we can pull up the charts together, you and me, and just talk on the phone, the two of us, and I can give you some friendly tips on, number one, would that chart have been worth trading in the first place? And if it was there anything you could have done to dodge a bullet on a false breakout? And how could you manage the trade better? What kind of patterns do we see? So anyway, that's included in the coaching call, and that's a valuable bonus. I charge $500 for half hours for institutional clients for phone calls, so you're getting that included in your annual membership, along with the Trade Mastery coaching course, or if you've already bought it, I know a lot of you have, and we can substitute that for something else. So anyway, this is my big once-a-year sale on the live room before the permanent price increase coming up in a couple of weeks after June 15th. So you can get a whole year with me for just $9.97. The neat thing about my live room too is, unlike other people, I don't do any BS upsells to, platinum coaching $5,000 or $10,000 programs, and I don't try and sell any $3,000 course or any of that kind of BS like other people do. You get my best for the one price, right? So you get the best of me is my live room, because we work together Monday through Friday. I show up at 8:30 or so, no later than 9. I stick around at least an hour and a half or 2, and we go through the very best tickers. And we update those live in the market for you as well. So something to look forward to. All right. Anyway, so that's the live room. I would highly recommend you give that some thought. It's a bargain. You get over 300 hours of training with me for the $9.97. And I used to charge that just for a 2-day seminar. So you get a whole year with me for the same price without the hotel bill. So anyway, high volatility charts. What we're after is recent high volume, consistent breakouts. So what we don't want is like an AMC pop and drop. What you want is like a Ford Motor Company week after week. The last 3 weeks in a row, Ford's been in an uptrend, right? Going from a base of 1150 up to 1650, almost 1650. there's plenty of room to run in Ford and many other stocks, and I certainly hope that we stay on top of these for you and we get the right kind of charts with both the right directional volatility and trade management. So I'm going to wrap up for now. Let me know if any questions. Oh, hey, Andy. Happy trading in Canada, back in action. Good to see you back in action. And now's a really good time to trade. Oftentimes, summer tends to be choppy, but not this time. We've got a high volatility market. The market's been a little choppy the last several weeks, but we're at a critical resistance area. So for that reason, as the market chops, we have all these charts that are doing spectacular breakouts. But save yourself the time. It's a real hassle to be constantly scanning for what the heck to trade. Let me do that heavy lifting for you, right? We can go exercise today too before it gets hotter. It's hot here in Colorado now. It was 82 yesterday, so it's starting to get a mite warm. Gotta get the air conditioner on. Anyway, love to work with you in the live room. You have my word. It's very sincere. Echo, stop. It's very, that's my ALEXA device, reminding me it's time to wrap up. So anyway, you guys have been great. Thanks for being here. I appreciate all the tickers. And hey, thanks, Miss M. Always great. Thanks as always, Ken. A relaxing rest of your weekend. Take care. You too. What do I see for the market next week? I don't predict, I react. I have no idea what the market's going to do. Ask any professional trader. It'll go up and it'll go down. What I can tell you how I'm going to trade is the correct answer. The correct question is not what do I see the market doing, it's what will I do if the market breaks resistance or support. So if the market breaks 42.50, of course, I'll be looking for the best breakout charts for all of you as live room members, and we'll see which of the charts continue up, whether it's pivots and things like the Bitcoin and cannabis stocks, or breakouts and our reopening plays, whether it's food, things like Carnival Cruise Lines or casino gaming stocks like DraftKings and MGM, or others in commodities, whether it's lumber or steel or whatever's running with the stocks that we like to trade. So anyway, good stuff. And obviously we're in an uptrend, but we're at overhead resistance at the 42.50. The one thing that I mentioned earlier that I would be on the lookout for is a potential false breakout or a bullish trap of 1 or 2 day duration. So don't get all excited if Monday or Tuesday is an up day. See what it's doing midweek Wednesday or so. And if we're still in an uptrend, okay, great. Then we can start scaling into our existing swing or position trades. But if the market does a false breakout, which is I fully expect, we could easily get a false break, as we do so many other times, right? You get what happens at every all-time high? All-time high, you get an immediate pullback for a week. All-time high, pullback for several weeks. Another all-time high, pullback for a week. Please notice the pattern cycle, the pattern cyclicity. When something breaks out to a new high at the time, what happens? It immediately sells off. You go back here when it broke out to a new high. Immediate sell-off. Back here when it broke out to a new high. Nearly a week-long pullback. So what happens when it broke out to a new high up here? Immediate pullback and chop. So as an active trader, you want to be kind of like a market detective. I don't know if any of you are familiar with the outstanding Canadian series Murdoch Mysteries. I enjoy that a lot. Anyway, the point is, or the CSI or Blue Bloods or whatever procedural cop show you're looking at, the market leaves clues, and every single time the market's broken out to a new high recently, it's immediately followed by a pullback. So that's something to be aware of. So you can either ride the pullback or wait for the breakout with the exact entry triggers that make more sense. And I'll cover those in the live room. So anyhow, let's wrap up for today. Thank you so much for being here. I wanted to wish you all the best for an outstanding, peaceful, and safe weekend, and just a friendly reminder with all the people want to get out of the house because of the pandemic. I guess we're somewhat protected with the vaccines. People are likely going to be drinking and driving nuts out there. So drive defensively. Be careful out there if you're going to drive. Be safe, and let's kick Wall Street's butt. Let's do well together. So I'll see you in the live room. Do join me at trademastery.com/live. Be sure to take action. I've already got orders coming in from my traders, live room members, and others who are curious to get in on the 1-year special. So you have my word, it's a great deal. No upsells, no extra stuff you got to buy or anything. It's all there. So take care and best wishes, folks. I will see you next time. Well, thanks, Margaret. Say Murdoch Mysteries is good. Yeah, we're on season 14, waiting for episode 12. All right. Hey, Steve, am I prepared to buy UVXY? I bought 65 shares yesterday, and I'll tell you why. Because whenever it gets a big drop, it almost always pops right back up. That happened last week too. So I bought just 65 shares, just under a couple $1,000 worth at 35 a share. But yeah, UVXY, keep that one on the radar. That's the best way to trade if the market bounces. If the market sells off, it's the best way to trade a bounce. I sold UVXY at 594 the last time it ran up. You buy the dip, you sell the rip. It's completely counterintuitive and for experienced traders only. But I bought 65 shares yesterday afternoon right before the close. Actually, I got filled earlier. I put in an order for, I think, 45 here at 34.12. That got taken out there, and then I bought another 20, icing on the cake. And what do you notice about volume on this 3-day chart? Biggest volume bar of all 3 days was people buying with the green volume bar, over 500,000 shares into the close yesterday. So it's a calculated risk, but it wouldn't surprise me to see us gap up to 35 and travel to 36, 37 Monday, Tuesday if there's any weakness in the market. So it's one way to play weakness. Weakness in the market is to buy UVXY, and to play strength, the one that I gave my traders to trade yesterday was SOXL, and we called it long on the breakout, our semiconductor long leveraged ETF, and it did a really nice pop for everybody yesterday. So if you're a live room member, remember I walked you guys through this one. And again, like I said, we always sell right under the whole number, the 0.8, 0.9, and that's where I said to lighten up. So good stuff. Anyway, thanks for being here. I do appreciate it. I will see you next time. Join me at my live room. You have my word, it's great training and really good price. So anyway, have a safe weekend, and I'll see you next time. Be good and trade smart. Oh, big turnout today. Wow. Thank you all for being here. Trying to close this thing down. In the webinar for all. All right, well, boohoo, we got to run. See you guys next week. Kick Wall Street's butt. Be smart about it. Trade the right charts. And to learn which charts, at least I like, join the room. Learn more. And hope this has given you some food for thought of intelligent charts that have really good directional strength and may well do good for you in the upcoming week ahead. So trade smart, and I'll see you next time. Bye for now.